One of the most important aspects to a high probability trade is the context that you frame it within. I personally believe that without good context, it's not a high probability trade. Now, market maker buy models and sell models are extremely simple ways of getting very high probability context behind your trade. So that's what we're going to be talking about today. There was a great example of it last week on EU and DXY. So we're going to cover that as well. Now let's get into the video. So first of all, let's go over a bit what is a market maker buy model and sell model. Okay, so a market maker buy model essentially is a great way of predicting a bullish leg in price. Okay, and you'll see with a market maker sell model is a great way of predicting a bearish leg in price. But we'll go over the buy model first. So essentially the way that it forms, firstly, you're going to get the sell side of the curve, which is essentially a bearish leg in price. Now this sell side of the curve is going to form multiple levels of liquidity on its way down, right? So you're going to get consolidation, impulse, and these consolidations are going to leave behind levels of buy side liquidity. Okay, now when we get the buy side of the curve, which is going to be that bullish leg we're predicting, that buy side of the curve is going to be targeting each of these levels of liquidity that were left behind when the sell side of the curve was formed. And just like the sell side of the curve, it's going to be consolidation, impulse, and each impulse is likely to target one of these levels of liquidity, right? And you'll see what I mean when I break down this diagram that I've got drawn here. We'll do that now, actually. So a little bit more detail, okay? So as you can see, this part of the diagram is a bearish leg. That is what is called the sell side of the curve, okay? Now, the way the sell side of the curve forms, firstly, you get the original consolidation. Okay, now that's going to be at the top of the bearish leg. So you're going to get some kind of consolidation that leads to an impulse to the downside. Now, in that original consolidation, price is going to form a high, right? It's going to leave behind a high, which is a level of liquidity. Now, that high that is formed is going to be the main target for the buy side of the curve, right? So the market maker buy model, the main objective is going to be to come back and target that level of liquidity formed in the original consolidation. Now, as price continues to move to the downside, you're going to get another consolidation, another impulse, maybe 2 or 3 times, right? So in this diagram, I have one redistribution followed by an impulse. Now, potentially that could happen 2-3 times before price starts pushing to the upside. Now, all you really need to know, again, you're going to get a consolidation that leads to an impulse and price is going to leave behind another high, right? Which is simply another level of liquidity that price is going to target when the bullish leg forms. So that's how the sell side of the curve forms, right? You get an original consolidation followed by an impulse. Then price may redistribute an impulse 1, 2, 3 more times before price turns around. Now, usually this sell side of the curve is going to be targeting some kind of higher time frame zone, right? Let's say you're expecting a buy side of the curve to form, but you have like a higher time frame zone down here that you want price to tag before reversing. Well, likely this sell side of the curve is going to be going to tag that higher time frame zone before turning around, right? And a lot of the times as well, you will see price taking out a nice level of liquidity first. Okay, so that's the objective of the sell side, right? To meet a higher time frame zone, take out some kind of liquidity. Now, once that is done, you get what is called the smart money reversal, right? Which is the turning point that shows the switch from the sell side of the curve now to the buy side of the curve. Okay, now a smart money reversal very simply is a sweep of liquidity and a CSD. Maybe you use market structure shift, maybe you use break of structure. It doesn't really matter. It's just a sweep of liquidity and a change in direction, right? That is the smart money reversal essentially. Now, once you have that smart money reversal and you know the buy side of the curve is forming, that's where you can very accurately predict bullish movement, right? That is what the market maker buy model is about, being able to predict that bullish leg in price. Now, the way that the bullish leg forms is essentially the exact same way as the bearish leg, okay? What you're going to see are consolidations followed by impulses. A consolidation followed by an impulse. Now, each of these impulses is going to target a level of liquidity that was left behind when price was forming the sell side of the curve, right? So let's say, for instance, we get the smart money reversal, price reaccumulates, and then we're anticipating an impulse to the upside. Now, that impulse should go ahead and target this level of liquidity here. Now, once we've taken that level of liquidity, potentially price is going to reaccumulate again, right? Where we'd anticipate another bullish move. And the target for that is going to be the next level of liquidity on the left. Now, of course, once we reach this original consolidation liquidity, that is the objective for the market maker buyer model done. Okay, but the whole time we haven't reached this yet. This buy side of the curve should hold and target these levels over here on the left. Now, like I explained earlier, there could be, 2 or 3 of these levels here before we get to the original consolidation. Now, another thing that's great about market maker buy models is when we have this buy side of the curve, price is likely to reuse the levels that it's inverted over here on the left, right? So let's say, for instance, you have a FVG here, right? That gets closed through. Price is likely to reuse that IFVG on the right hand side, okay? Now, there are also instances where price uses the order block on the other side, right? Which you don't really hear of a lot, but you'll see when you look at your own examples, a lot of the time, let's say, for instance, we have this bearish order block here. Now, once price closes through it, so let's say this is the range of the order block, so we get a closure through it here. A lot of the time, you'll see price does come back and tag that order block before running to the upside. Maybe you wouldn't mark it up like that because you already have, an FVG or something here. But when you go and look at your examples, you'll see that price reuses the levels that get disrespected on the sell side to propel price higher on the right hand side of the chart. So that's a market maker buy model. I'm pretty sure I've explained everything. I don't think I'm missing anything. Now we'll go over a market maker sell model, which is the same thing but opposite. Okay, so essentially you're going to use a market maker sell model to identify with high probability a bearish leg. Okay, now the way that this forms is, firstly, you're going to get the buy side of the curve. So you're going to get a bullish leg first. Now, the way that this bullish leg forms is going to be with consolidation, expansion, and each consolidation is going to leave behind a level of sell side liquidity. Now, these levels of sell side liquidity are going to be the targets for the sell side of the curve. So once we get the smart money reversal up here, that sell side of the curve starts. Now, these levels of liquidity left behind become the targets. Okay, and like I just explained with the market maker buy model, the levels that get inverted, right? So these levels up here that form, the ones that get inverted are probably going to be used on the other side to propel price lower. Okay, so we'll explain in the diagram a little bit better. It's easier to explain with the diagram. So the buy side of the curve is going to form first. So we get what is called the original consolidation, which is going to be at the bottom of the buy side leg. So you get the original consolidation. That's going to leave behind some kind of liquidity, right? The low of the consolidation will leave behind some liquidity. Now, that is the main target for the market maker sell model, right? That's going to be the main objective. Once that's reached, the market maker sell model has completed the objective. Now, after the original consolidation, you're going to get an expansion. You're likely to get another reaccumulation followed by another expansion. Okay, now that reaccumulation, again, is going to leave behind liquidity that becomes the target for the sell side of the curve. Now, the buy side is likely reaching into some kind of higher time frame zone, taking out some kind of liquidity. Once we do that, okay, you're likely to get the smart money reversal, which is like a sweep and a CSD. Basically, just a change in direction. Then the sell side of the curve has begun to form, and your targets then become these levels of liquidity. This is the main objective, but these are also the objectives for price, right? You'll likely get a redistribution to target this low. Then you'll probably get another redistribution to target this low. And if there was another reaccumulation over here on the left, it would work the same way. So you'd get a redistribution to target this low, another redistribution to target that low, then another redistribution to make the main target, right? So it's like it moves in stages, and every time price is inverting levels on the left hand side, it's going to use that on the right hand side to propel price lower. Now, it might sound complicated, but essentially all it is a sell side of the curve targeting liquidity on the left, and you have a very high probability target formed in the original consolidation. So that's a market maker sell model and a market maker buy model. Now, you can use this on any time frame, right? You'll see it works on the monthly, the weekly, the daily, the 4 hour, the 1 hour, the 1 minute, right? It works on every time frame because the market's a fractal. Now, me personally, the times where I use this the most is probably when it comes to framing my week. right? Because I already have the daily cycles for my intraday stuff. When it comes to framing the week, I find this very, very useful. So let's go over the example from this week and you'll see exactly how I used it. Okay, so the first thing I want to do is break down what I was looking at going into last week. Now, if you've seen the weekly outlooks that I post in the free Telegram, you'll see a video every single Sunday of what I'm looking at for the week, essentially. But if you haven't seen that, I'm going to go over what I was looking at for the week so you understand the bias that I had. Okay, so on the dollar index, we had taken out this major level of liquidity down here. Now that's external range liquidity, okay? And price had then traded back into this weekly FVG, right? So from there, you may be anticipating that price is now going to run to the downside and target external range liquidity, right? And that's the right thing for me, in my opinion. That is what I wanted to see. However, if we go on to the daily, or actually if we go on to the 4 hour, okay, I did not believe price was finished running to the upside, right? Because within this level of internal range liquidity, let me just label it, price had actually formed equal highs, okay, which tells me that price isn't done pushing into this zone, right? It tells me that price is likely to make one more run to the upside at least to target these equal highs, and then potentially price will turn around and start to form the bearish order flow to the downside. So in my opinion, what I wanted to see is another run higher. Okay, that's what I wanted to see. And if we go onto the daily chart, we actually do have a buy program on the daily that backs this up, right? Price had respected this bullish order block. We had also tagged this daily FVG at the end of the week before, right? So this is on, what day is this on? Friday. Price had tagged the FVG on Friday, rejected away. To me, that is a very clear sign that price is respecting the FVG, and I was happy to see another run higher. Now, if we break down what happened on the 4 hour at the start of the week, you can see price went into a consolidation, okay? So this is that daily FVG here. You would anticipate that to be respected and for price to run to target these highs, but instead we formed a failure swing. Price failed to get up there. Then we came back to the downside and we formed another failure swing because we didn't take out this low. Now, those criteria for me validate a consolidation. Once I see a failure swing in both directions, I'm sidelined. Price is moving sideways. Okay, so I sidelined myself for this. I put it in the Discord. I said I'm not trading. I basically let my Discord know that, you know, these conditions were not ideal to trade, right? And I sidelined myself. And really what I look for is for price to now take out either side of the range. So for price to target this high or for price to target this low, and then I will get back into the markets, okay? And if I play this out, you can see that price took out the low of the range, okay? Now, this is where we need to get into the market maker buy model, sell model framework. So let's first break down the sell side of the curve. So up here, we would have the original consolidation within there, okay? And that led to an impulse to the downside, leaving behind this high up here, right? So we've left behind a liquidity level. Now that is at the top of the sell side of the curve. So that's going to be the main objective for the market maker buy model. So I'll label that for you. Main objective. Yeah. And then we had an impulse away from that level. We actually formed a redistribution, okay, which is this consolidation here. Within that consolidation, price took out this old high. And then we had another impulse to the downside. So this high here then becomes another liquidity objective that should get reached for when the buy side of the curve forms. Okay, so we're forming that sell side of the curve. Now, like I said before, we want to see price reach into a higher time frame PD array and form that smart money reversal. Okay, now if I go onto the daily chart, you can see we were within this daily FVG. And it actually gets filled in with this impulse to the downside, right? This bearish leg here is what filled that in. So we've met a higher time frame objective. We've now filled in that bullish FVG. Okay, and we've swept liquidity, right? We've taken out the low of the consolidation. Okay, so we've formed that sell side of the curve. Now, if we go on the 1 hour and we look at how this low formed down here after taking out this liquidity level, okay, price has formed a bullish CSD, right? Which is going to be that smart money reversal. Now, potentially, you want to wait for price to respect that before you engage. You don't have to wait if you're super confident in the bias. But in this instance, I personally wanted to see price respect that and move higher first, okay? But once we respected this order block and moved higher, setting in that smart money reversal, now I am confident that the buy side of the curve has formed, okay? So now the buy side of the curve has formed. What we're looking for are opportunities to buy to target, firstly, this level of liquidity. Then once that gets taken out, I look for another opportunity to buy to target this level of liquidity, which is the main objective. If I play out the next part of the chart, you can see that's exactly what happened, right? Price has run to take out this level of liquidity that was formed on the sell side of the curve, right? And after taking that out, we had a retracement, right, back into a bullish array like this FVG here. Now from there, we will anticipate another run higher, right, to target the main objective, right? So you see how we have the sell side of the curve, we've got the smart money reversal. Now each new push to the upside should be targeting a level of liquidity formed on the sell side of the curve, right? Now this was a little bit techie in terms of timing, but this next move here is timed beautifully within New York session, and that is where the trade opportunity occurred. So on DXY, I'm now expecting a run higher for the main objective, and I correlate these moves on Euro USD. So we'll go on Euro USD and I'll show you the trade. So we already have the market maker buy model on the dollar index, so I'm not going to get too much into it here on EU because you could just use the draw on the dollar index. But essentially this low down here corresponds with that main objective on the dollar index, right? So we'll just mark that out because we know that that's our draw right now, right? Price has taken out this level of liquidity and we have this bearish order block on the 4 hour, which as you'll see price retraces into, right? So we take out this liquidity, we tag this order block here, and then the next objective is this low down here. If we go on to the 1 hour as well, if I play out a little bit into New York, you'll see that we have this bearish FVG that price tagged as well, right? You can see we filled it in, rejected away, so we're respecting that perfectly. So the sell side of the curve essentially is being respected nicely, right? It's just bearish order flow, and we have this main objective. So because we have that clear framework, now all you need to do is look for a daily cycle, right, on the intraday. All you need to do is look for a daily cycle. Now in this instance, if I put on the kill zone, you can see this purple box here is London high, right? Price has come up above London high in New York kill zone, which is this orange box. Okay, now if you've been watching this channel for a little while, you'll know this cycle. If you haven't, I'll break it down. So essentially it's called New York reversal, where London kill zone, it can do anything, right? It can consolidate or it can impulse, but essentially you're playing the New York session when it takes out London's high, right? So you're expecting London's high to get ran out in New York session. Once we take out London's high, you're looking for an entry up here, and then New York should impulse to the downside. And on these New York reversal cycles, you don't just have to hold for New York. You can actually hold the trade through London close, which is 3 p.m. to 5 p.m. UK time. So this one can run further than New York session. Okay, so that is essentially the New York reversal cycle. We're looking for New York, sweep out London's high, get an entry, and then you can hold until around 5 p.m. I think 4:30 is the sweet spot. So on the intraday, we are forming the daily cycle, right? It's forming the daily cycle. We've taken out London's high. Now all we need to see is the entry. Okay, now if I play this out, we actually have SMT here with GBP USD, right? So at the time I was looking at it, I was like, damn, we've formed equal highs, right? I'm trying to get an entry, formed equal highs. Usually I wouldn't execute, but if we go onto GBP USD, this same high was taken out. So it's SMT, which means it's manipulation, which means I don't have to care about the fact that we've got relative equal highs on Euro USD, right? So we formed that. After forming that, we formed a 5-minute CSD, okay, with an FVG, right? Let me turn off the kill zones. But sometimes it's like too much color. It's like you can't even concentrate on what's going on. So I have to turn this stuff off. But yeah, so we form a 5-minute CSD by closing below these two up candles. That's a bearish order block. that shows basically that we've gone from a buy program to a sell program. So that's the lower time frame confirmation to get in the trade, because price is now moving to the target. Even if I go onto the 15-minute, right, we actually have a 15-minute CSD lower down, because these last two up candles got closed beneath. So maybe you want to play 15-minute CSD, maybe you want to play 5-minute. It's completely up to you. I think my personal choice of entry would be to wait for the 5-minute CSD, and then I'd probably be getting in off of this FVG here. Obviously, I was away and I was traveling when this trade was playing out, but I was watching it. I just didn't execute. I just thought I was in a bit of a rush. But yeah, that would be my entry, right? Stop loss can go here. Potentially, you could put it here because that's actually the high of the order block. But it just depends how conservative you want to be with it. And essentially, we can hold this trade until price reaches the main objective on the dollar index. Now, I go for 1 to 2 minimum. So I would just have to set it at 1 to 2 because the main objective is a little bit higher. But if I play this out, you can see price respects it and we run to the downside to complete the main objective. And if we go into DXY, you can see indeed the buy side of the curve did hold to the main objective, right? So this is a really easy market maker buy model that you could have framed the trade around, right? And literally framed your whole week around, right? You could say, cool, I'm waiting for price to form the low, right? Form the smart money reversal midweek. This was formed on Tuesday. You know, that aligns with the classic expansion week. Once we get that, you should be very confident in the buy side of the curve holding, and you could have bought, you know, maybe Tuesday, Wednesday, and Thursday. You know, it's completely up to you. Now, one thing that is interesting, right? Remember I spoke about the fractal nature of the markets. Like, this can be used on any time frame. I use it to frame my weeks most of the time. That's the only real time I see it and I'm like, yeah, I want to use it as a confluence. But if you wanted to use it on the lower time frames, you can do that as well, right? If we were to break this down a little bit, maybe you'd consider this the original consolidation down here, right? We leave behind a level of liquidity, and then we have a reaccumulation here, and maybe you want to mark out this as a level of liquidity that was left behind, right? Maybe you want to consider this its own consolidation, right? So we leave this level of liquidity behind. Then up here we have the SMT, which is a manipulation, followed by the 15-minute CSD. So manipulation and CSD is a smart money reversal. So from there, the sell side of the curve should hold and we should target these levels of liquidity, right? You can see we tag the order block, we push lower. That order block in itself is a lower time frame consolidation. What time frame am I on? The 15. If we go on to the 5-minute, or we'll go on to the 3-minute, you'll see what I mean, right? We have this level of consolidation, targets this low here. Then price retraces a bit. That would be a lower time frame consolidation. It runs lower and we target this level of liquidity here, right? Then once price has targeted this liquidity, it retraces. We have another consolidation, and then the main objective for the market maker sell model is targeted, right? So you can break this down onto any time frame that you want. You can use it intraday, you can use it lower time frame for your entries, you can use it for the higher time frame for the framework, which is what I personally like to do. It's very, very flexible. So yeah, that is how you can use market maker buy models and sell models to frame your trades with very high probability whilst keeping it very, very simple. If you want to join the free Telegram and the free Discord where I put predictions and weekly outlooks and whatnot, I'll leave the links to that in the description. I hope you found value in this video, and I'll catch you on the next one.